they will revalue gold. Now, they could market to market, or maybe they go much higher. James Rickards is saying 24,000. 25% in gold is not overweight. And then the 6,600 part, that's Jefferies. They used to be a primary distributor for all the world's mints. And they said 6,600 is their next target, at least intermediary target, for where they expect gold to go before it gets takes a little bit of a breather. Traders and analysts and chief investment officers speaking to the most sophisticated traders in North America saying 25% of your portfolio in gold is not too much. You got Bank of America just saying $67 for silver is their target for next year. So when we talk about record highs around 4,400 gold and then it falling off and everyone's saying it's over when you have these analysts saying this, and here we are back up above $4,100, and that shows the strength and the underlying support. So gold's held up because of central bank accumulation.
Financial expert Andy Schectman shares his insights on the soaring gold and silver markets, highlighting why institutional investors are betting big on precious metals. Analysts and major banks are projecting significant targets, with gold potentially reaching $6,600 as an intermediate goal. And silver forecasted at $67 next year, even with previous pullbacks from record highs around $4,400 gold. The market has rebounded above $4,100, demonstrating strong underlying support. Schectman emphasizes that central bank accumulation is a key driver keeping gold robust, while massive institutional money continues to flow into both metals. Chief investment officers and top analysts are now recommending portfolios with up to 25% in gold, signaling a major shift from the traditional 5% allocation. Market skepticism over past fluctuations is being replaced by confidence in the long-term value and structural strength of gold and silver. For investors watching global markets, this trend represents a critical opportunity to understand how institutional strategies and central bank policies are shaping the future of precious metals. If you found this helpful, like, share, and subscribe to the Metal Bar. Turn on the bell so you don't miss any updates, and comment below to share your thoughts on it. Appreciate you for tuning in. Now, listen to the interview.
But in essence, they're trading, 7 or 800 million ounces a day in London. 2 billion a day if you add the COMEX and the Shanghai market. But in London, 7 or 800 billion ounces a day with a float of 150 million ounces. What could possibly go wrong? And so, yes, they are. And I mean, you can simply say the silver inventories are extremely thin, and the pressure is accelerating. It'll be much greater if China and potentially the U.S. curtail exports. Part of naming silver a strategic element is that the U.S. can now very easily, the president can restrict and curtail exports. And this sets the stage for a potentially explosive reaction if demand or the systemic stress accelerates. What is the systemic stress? It's if one of these banks in London has a failure to deliver. And it's not just the silver market. These banks are connected to everything financial. And so you would expect to see a contagion, a systemic reaction reverberating through all markets. But yeah, I mean, the truth of the matter is London has been exposed as far as I'm concerned. And they're hanging on by a thread. There's exponentially more demand than there is supply, and there's exponentially more contracts than there are bars. That is a powder keg waiting to happen. We know that India has been a massive player in the silver market. You can find quotes that it's purchased between 6, 7, 800 million ounces in the last 5 or 6 years. Copious amounts. We know that Russia said we're going to add it to our strategic stockpile, being one of the first countries ever to say that. We see massive deliveries. Talk to David Jensen on the COMEX, the LBMA numbers. Huge deliveries coming off the LBMA in a hugely rehypothecated market where way more contracts exist than bars standing behind it. To your point, we saw Saudi Arabia jump in, and I think it bummed a lot of people out that they bought SLV, but the amount that they bought in SLV allows them to actually stand for delivery. I think there are a lot more countries that have been doing this just on the down low than we are led to believe. You look at China as the second largest producer in the world, flying all around South America, going directly to the miners. Sean Kunkun has talked about this, CEO Dolly Varden, where they go right to the miners, disintermediating the marketplace, buying doré and concentrate right from the miners, paying double what the West will, and sending it back to China to refine it. They control the majority of all the metal refining and rare earth refining, so they just put it on a barge and send it on back to China. But it's coming from the second largest producer in the world, so that should put a little bit of context into it. If they're making that much or producing that much, why fly all the way to South America to pay double what the West will to buy doré and concentrate and send it back for refining? I think you will see that. I think it's been there under the surface if you really dig. Shortage of physical supply at the highest levels, the LBMA, the COMEX, and now even the Shanghai market, they're all showing stress, if you will, in supply, and the amount of, or the number of deliveries is off the chart. And coupled with, surging demand for things like industrial investment, central banks, sovereign wealth, the same stuff we've been talking about forever, man. Silver is being pulled from every direction. That's just the bottom line. And not enough talk about it anywhere except on the alternative media channels, so it doesn't gain any traction. But where you will start to see some traction, in my mind, is the fact that the U.S. government just designated it as a critical mineral. And to me, this changes the narrative. Silver is no longer just a commodity. It's a matter of national security, national strategy. And when you talk about the kind of potential that silver has, remember that in terms of market cap, it's the tiniest little nothing market. And when capital begins to flow in, like the United States government and the sovereign wealth funds, it doesn't move gradually. It will erupt at some point. I do believe that. But the bottom line, Jesse, is you got tight supply, you got surging demand at the highest levels, coupled with systemic risk and the LBMA and what could happen if we see a delivery failure, coupled with official recognition. I would say silver isn't just poised to move, it's ready to explode. And yeah, it has been catching its breath. And anything that moved that fast, 40% in a couple of months, is overbought. That's the definition of overbought. And it needed to correct. It did. And here we are back above 50 again. So yeah, I say buckle up for what's coming next.
Silver markets are under immense pressure as supply struggles to keep pace with skyrocketing demand, according to market experts. Daily trading volumes in London alone reach 800 million ounces, with global markets including COMEX and Shanghai adding billions more, while the actual physical float is only a fraction of that. This discrepancy highlights the risks of systemic stress, especially if delivery failures occur at major banks, a scenario that could trigger widespread market repercussions. Countries like India and Russia have been quietly stockpiling silver, while Saudi Arabia's strategic purchases of SLV show how nations are preparing for potential supply disruptions. Meanwhile, China is buying directly from South American miners, paying premiums to control refining and secure the metal, illustrating the high-stakes global race for silver. With the U.S. officially designating silver as a critical mineral, its importance has shifted from a simple industrial commodity to a strategic asset tied to national security. Central banks, sovereign wealth funds, and institutional investors are all contributing to unprecedented demand, setting the stage for potentially explosive price moves. Physical shortages coupled with surging global demand and systemic vulnerabilities suggest silver is no longer merely overbought or correcting. It's poised for major growth. Investors should watch closely as the market dynamics evolve, particularly in the context of strategic accumulation and geopolitical influence. Let's get into the interview.
But I think a lot of countries, especially those in the BRICS, have understood that, silver is, and gold, that this is a race for the world's commodities. And it's not just the precious metals, it's the base metals, it's the soft commodities. He or she who has the gold makes the rules, is how it used to be. How about he or she who has all the world's commodities makes the rules in the coming future? And I think that's what you're seeing. So yes, I do think you'll see more countries and sovereign wealth funds. Probably at some point it'll be more transparent what they're doing. But in a world where information travels so quickly, it doesn't behoove any of these players to let anyone know just how much silver they're gathering. And then look at the U.S. I mean, I don't care what anyone says. It ain't about tariffs. I've been saying that for a year now. It is not about tariffs. It is not about arbitrage. Sure, there's a little bit of that truth, but it's being reshored. And I've been screaming this. Look, all this silver coming into the country can't just be about tariffs. That was the ruse to get it all back here. Some of it's flowed back to ease the burden at the LBMA, but what it really is the smart money trading ahead of the news. Like, they knew that this was going to happen. They knew that it was going to be reclassified a critical mineral. So what do? They reshore it. They say it's tariffs so that London releases it and Switzerland sends it. Oh, by the way, it's reclassified. I mean, everything that at that level that they do, you look at all the massive gold accumulation in 2016, 17, 18, and 19, and then the Basel III reclassification of gold. These things that at the highest level, information is worth more than anything. And the people accumulating it, the central banks, the sovereign wealth funds, they're not just the most well-funded. More importantly, Jess, they're the most well-informed. And I think that's really what you would expect to see, the inside money moving first. And I think we're transitioning to that point where it's now out in the open, at least more so than it's ever been. And at that point, it's anonymity be damned. It's everyone rush to secure what they can while they can. At the same time, you're seeing massive deliveries on COMEX. Now, these are people that are incredibly sophisticated and are trading in billions upon billions upon billions upon billions of dollars every week or month into COMEX. I don't care what argument people want to make. The people at that level that are bringing in that kind of metal, they don't do things, pardon my French, for shits and giggles. They have all of the information. They know what's coming. And isn't it interesting that as we become a net exporter of gold, that gold, even with its pullback, is up north of 50% this year, an asset that pays no interest. But who's been accumulating it all? Not only the most well-funded traders in the world, the most well-informed. I've been screaming this. You can't look at the mainstream media and base your conclusions upon a faulty narrative where all of the media outlets are controlled by 4 companies. Instead, look at what the biggest money in the planet is doing. And yet, there has not been one mainstream news article about all the gold and silver coming into COMEX. I have yet to see anyone talk about it, or any Jim Cramer or any of these so-called experts. Why isn't anyone saying, why has the United States imported billions upon billions upon billions? Oh, that's right. We've been doing that with silver too. And we did just reclassify it a critical mineral. Maybe the insiders knew what was coming. My point to you is that the insiders are always positioned well before the herd. And we've seen it for years now with gold. You're beginning to see it now with silver, with copper, with everything. And so the public is always the last to catch on. This is the whole theory of wave theory, Elliott wave, Kondratiev wave. Emotions control the market. Right now, the market is being controlled by greed, where you have 10 stocks worth over 50% of the market. That's ridiculous.
The global race for commodities is intensifying, and precious metals like gold and silver are at the center of the storm. Market insiders and sovereign wealth funds, especially in BRICS countries, are quietly accumulating gold, silver, and other strategic resources. Understanding that control of these assets will shape the future of global trade. This isn't just about tariffs or arbitrage. It's about smart money moving ahead of critical market shifts. The U.S. reclassification of silver as a critical mineral highlights its growing strategic importance, while massive deliveries on COMEX show that well-informed investors are positioning themselves before the public even catches on. Central banks, sovereign wealth funds, and top traders have been quietly reshaping the market for years, accumulating precious metals in preparation for systemic shifts. Meanwhile, mainstream media remains silent, leaving everyday investors unaware of the scale of this accumulation. For investors, the message is clear. Inside money moves first, and understanding these shifts in gold and silver markets is critical for long-term wealth preservation. While the herd reacts to headlines, insiders act on data, strategy, and foresight. If you found this helpful, like, share, and subscribe to The Metal Bar. Turn on the bell so you don't miss any updates, and comment below to share your thoughts on it. Appreciate you for tuning in.